Hey everyone, quick look at our single stock strategy compass. We've got some interesting names that have come up on that today. We've got Tesla and Netflix. What do we think about these names? Tesla's coming in at buy puts. We've obviously had a pretty strong rally on Tesla recently. It's kind of hitting this volume shelf here. And it's also got this downtrend resistance coming in as well. So, for those of you, I know there's a lot of bulls out there in Tesla, but the reality is this thing still is in a downtrend until that resistance is rejected. We've got earnings coming up next week. We actually think an implied move of only 6% in Tesla, when Tesla does 10% for fun on earnings, we think that's quite cheap. So actually, if you're bearish Tesla and you want to fade this little rally that we've had because you actually don't think the earnings are going to be great, they've been lowering prices on their cars, that's going to dent margins, their delivery numbers might be too optimistic, all these reasons to be sure. And our friend Tommy Thornton over there at Hedge Fund Telemetry, he's a bit of a bear on Tesla, as he's expressed recently. If you agree with him, owning some short-dated puts expiring next Friday might actually be the way to do it. So the 250 puts only cost $4.50. Obviously, the implied vols on those look relatively high on a 50 handle, but like I said, the stock's only implying a 6% move. So if you were to get a disappointment, we know this stock can easily drop 10% in a day on earnings. So this might be a nice little trade for you to have a look at. All right, that's the Tesla trade. And then on Netflix, the stock's got beaten up pretty badly in September. It has started to consolidate. It's kind of near the bottom end of its range. If you want to buy the dip here in Netflix and you think the uptrend is still intact, we'd go out to December. That way you don't have too much time decay. The vols aren't exactly that low in this stuff. So you want to push your expiry out. Going for something like the 450 calls out to December looks reasonable to us. And like I say, if you are looking to buy the dip safely in a market that has many unknowns out there, we think using December optionality is the way to go. All right. Thanks a lot for listening. Catch you all soon.